let me walk you through exactly how I research dividend stocks for my portfolio. I'll show you my process step by step. I prefer simplicity and calm investing. So I'm not going to be talking about chasing the highest yields or giving you the hot stock tips, just a repeatable process that you can use anytime you like, the one that works for me. And this isn't financial advice, just my personal process. So let's get into the video. First, you need to narrow down the market. You don't want to start with the entire market, it's just unnecessary. So I like to start with the ASX 200. If you have investing experience, you might want to expand to the All Ords, but the ASX 200 is a perfectly fine place to start. I find perfectly good companies there. The reason we're starting with the ASX 200 is because it holds the biggest companies within Australia. They're just more established and usually more stable. And plus, there's just better liquidity, so more buying and selling going on. So you're not going to be stuck with a smaller company that nobody wants. But of course, it's the stability that I like, which is especially important for dividend investors. And the top sectors within the ASX 200 tend to be the ones that pay the highest dividends anyway. So those are the financials, industrials, and consumer companies. So don't stress too much about trying to find the full list because it does change. But when you go to research a company, it will tell you which sectors and which indexes that company participates in. And anyway, the main reason is if you're sticking with the top 200 companies, it's just going to save you a lot of time. There's over 2,000 companies listed on the stock exchange. You don't want to be looking at all of them when all the best companies are in the ASX 200 anyway. Second is yield. So you start here, but it's not your final decision. Think of dividend yield as like the interest rate on your invested money. It's paid from the company profits and given back to shareholders. And you'll find this on the dividend section of your company's page. Or you can just go to Google to make things easier. I like to look for dividend yields of 5% or higher, although sometimes I will go lower for a really good, solid, stable company. So let's look at an example. BEN, Bendigo and Adelaide Bank. It currently has a dividend of over 5.5%. So this would definitely be one I would put on my list for investigating further. To save you even more time, a lot of trading accounts will let you filter by the size of the company. So you can choose the ASX 200 and the dividend yield. So you're choosing companies above 4 or 5%. It just makes things a lot simpler and quicker. But high yield is not enough. I want consistent income. Stable dividends means stable income for you, the income investor. So this is where I usually spend the most time deciding what I'm going to purchase. Because high yields are great, but not if they're not consistent. So here I'm looking for stable payouts, but even better if the dividend is growing over time. Look at the dividend payouts over the last 5 years. You want to compare a full year's payments to the previous year rather than comparing the interim dividend to the final dividend, because sometimes they can vary. You'll either see this as just straight figures, or sometimes you'll get a graph, which I prefer because looking at a visual graph is a really quick way to see if the dividends are consistent. 3 things you want to be looking at here. Are they stable? Is there no wild swings between payments year to year? Are they consistent? Are they paying at approximately the same time each year so you know when your income is going to come in? And of course, a similar amount each time. And the last one to look for, are they growing? Is that dividend growing over time? Because you want to see those payments going up rather than down. An example is JB Hi-Fi, which has very stable growing dividend. This is the type of graph we love to see. So by now you should have a good list of companies that pay great dividends. They should have strong yields, consistent payouts. What's the next thing to look at? Even though you're investing for income, you still want capital growth. I mean, how else are you going to brag about your portfolio size? Look at the 5-year and 10-year if you want the price growth over that time. Google is perfectly fine for this, and I actually prefer looking at Google for this information rather than in my trading account. Here's ANZ, which is up over 45% over the past 5 years. So you would be getting income and capital growth. Perfect. Here, anything above what the ASX 200 did, which was over 29% over the past 5 years, is considered excellent and a great option. But average growth around what the ASX 200 did is perfectly fine as well. You're not chasing moonshots here. You just want something that's stable and growing over time and giving you good income. So first, you narrow down the companies you want to look at to the ASX 200. This is going to save you time, give you the most stable companies, and most of the good dividend stocks are here anyway. Then you want to look at yield. I like to look at 5% or higher. Sometimes I will go lower. Mostly though, you want to see if those dividend payments are stable and preferably growing. That's the most important one. You just want it all to work in the background while you go about your life. You don't want to be checking the market all the time or worrying what the price is doing. You just want it to work. And finally, you do want growth as well. There is no point getting a good income, a good dividend yield, if the price is decreasing over time. You do want both. Should you look at other factors? You can. If you want to narrow it further, here are some other things I sometimes look for. I don't look at these all of the time, but sometimes I do. The first is debt to equity. I generally don't like companies with too much debt because if the company gets into trouble, dividends are often the thing cut first. So I prefer to keep the debt to equity figure under 85%. Now, it's worth noting that financials and banks don't have this figure because they are the ones that give the money or loan the money rather than borrow it. You might also want to look at the payout ratio. I prefer this under 75%, and you'll find this under the financials tab of the company information page. Now, I don't stress too much about this figure because if the company is paying consistent growing dividends and the price is growing over time, consistency and stability are far more important to me. And if the company has been consistent over the long term, I have no reason to believe it won't in the future. Now, this process usually narrows things down to about 15 solid companies. From there, you can put the companies into a watch list. You might want to compare them to each other, or maybe you just want to decide which one you like the best and buy it. Maybe you're ready to buy. I generally only do this a couple of times a year and have watch lists on companies that I'm interested in. And then when I'm ready to buy, I will go and have a look at my watch list and choose one when I'm ready. And that is how I've built my dividend income. It's the process that I use that's repeatable each time, keeps things simple, and it has worked really well for me over the years. I hope you found this video useful. I will see you in the next one. Take care.